the week. What happened this week, right? So just going to give it a second here. There's a bit of a lag when streaming. So I'm just waiting for the chart so you guys can see exactly what I'm talking about. Try that. Hold on, guys. There we go. All right. That PowerPoint was blocking it. Okay, so Monday we came in. Monday was the 4th, right? Right here. So we came in, I said, hey, you know, we came down, we touched the moving averages, and we had all this massive volume right back here last week, right? And I said, you know what, we might go back up and test, and then we might come back down. Well, yesterday, it had that bearish look to it, right, on the indexes overall. And so there was a chance that we could have come back down and retraced to the moving averages. However, we did not. We gapped up. We are in earnings season, so it is possible to have these big gap up moves intraday. You can see last week from, that was Thursday into Friday, we gapped down. And then this week, Thursday into Friday, we gapped up, right? Well, we do have this big resistance right here. I'm sorry about all those orange lines. I'm trying to talk to TradingView to get the alerts to be a different color, or to even be able to hide them, just so I get the audible and the pop-up. So we're right here. We have gapped up. We're up at the high of the day. You guys can see right here, the high of the day down on the bottom right at 292, right? So we tested where we were on the 30th, the opening price from the 30th. We have a possibility to go back up and test up here, this yellow line, which was resistance, back on the 29th. Also, a dark pool level from the past. So we also see that we've got these moving averages right here. We could potentially come up and test 293.56 or 293.95 before we head back down. There's no guarantees that we're going to head back down, right? As long as the shorts are piling in and the market is moving up and there's irrationality, we will go ahead and move forward in a squeeze. One of the best things from reminiscence of a stock operator, the market can stay irrational longer than you can stay solvent, right? So keep that in mind in going short, right? Tesla's squeezes those shorts. We've seen a lot of majors. Let's go over, I've got the SPY holdings up over here. So when we look at, if we're looking at the indexes, again, I mentioned it on Monday, you want to look at that overall, sorry, I just want to mute this over here so I don't have any other alerts. That you want to look at the overall holdings, right? So I've got the SPY Microsoft coming up right over here. And you can see Microsoft, I mentioned, hey, on Monday, we're going to test that yellow trend line, but we need to go ahead and we need to break out with volume. Sure enough, on Tuesday, we had that volume come in, right? We had that volume come in above that trend line, and we're riding those moving averages up. Right now, we are starting to see a little bit of a decrease in the volume down here at the bottom, right? So we're seeing that decrease. I don't use the stochastics to get in or out, but note it, right? You can use these to go ahead and look and see what's happening. And you can see, all right, we're getting a little bit in the oversold area. we're still going up. The faster one is still above the slow one, and we're still moving up. So for the moment, Microsoft is moving up, right? And it was really interesting because Amazon came, hey, you know, why did the White House choose Microsoft? We start to get into the politics of things, the manipulation of things, right? You know that Microsoft is a larger part of the SPY now than Amazon. And as a result, if that one continues to go up, if there's some manipulation and trying to keep the market up, no wonder potentially that they are awarded the cloud server for the White House, right? Or for the government. Keep it up. Right? How many ways can this market be manipulated? If you guys don't believe it already, come on over, check out the training pit at thepools.com, and we will teach you all about trading around the dark pool. There's time and time again where we see it perform over and over and over again. All right, so Apple, same thing. I had this downward trend line, just waiting for it to load. So we had that yellow down trend line. And I said on Monday, hey, we were down below it. I said, we need to go ahead and have it break above broken above. There we go. We've broken above that yellow trend line, but the volume is decreasing a little bit. We are squeezing some of those shorts. There are people still getting into those short positions. Hey, this market's going up and we've got, 16% unemployment. Well, that unemployment was better than expected, right? So when you start to have numbers that are better than expectation, the market can react accordingly. But there's always somebody that knows something ahead of time and places a trade before that. And those are the dark pool prints that we see. So I will give you, at the end, I'll give you one of the ones that we are really watching going into next week. And it's good to keep on the radar because it could be an indicator of the market overall. All right, so Amazon had earnings, gapped up, came down, hit the 20 simple moving average. Let it load for you guys. I've got my 21 EMA here as the green dotted line, just below the orange one. So we came down, we hit the 21 EMA, and now we're slowly riding up the 20 EMA, and we're testing a trend line from the past, right back here. And if we break out above that, we could head on up to that 250 area, 2450 area again, fairly easily. But check out the volume too at the bottom. The volume really isn't increasing, right? It's decreasing. So that's something else to note. If we start to have a major volume day, when was our biggest major volume day? Day after earnings, we are above that, right? Day before that was pretty high. So we need to have it break above the 2440 area for it to really move and make new highs all over again for Amazon. But we're holding above this green dotted trend line as a support, and we're testing this yellow mini trend line as a resistance at the moment. So if we can break free from that yellow trend line, we could be going up to 2440 again. And that would help to bring up the Qs. Let's check out Facebook. So I'm going through the index majors right now because it'll really give you an indication of what could potentially happen with the market. When all of these majors are moving in that upward trend, then the momentum of the market right now is upward. Tune out the news. Yes, we are going through a pandemic right now. Yes, there is major unemployment. But as a day trader, you're not going to be married to these trades necessarily. It's going to be different as a swing trader, right? But as a day trader, you can look at it. What does this chart tell you? Got my 3-year-old daughter. She will look at it and she'll say, Mommy, it's going up, right? Read the chart. Right now, we're going up. And until we hit that point that we start to see it curl over, when we have these massive moves, again, further away from the moving averages. I'm looking back at April 30th on the chart where we had that candlestick that really gapped far away from the moving averages. It could move back. So that is also a scenario that we might be in for the SPY. Let me put the SPY back up again. So we're still moving up. We had some great movement today. And on the SPY, let me pull it back down here. It's going to take a second to adjust for you guys too. Right? So we have this bit of a gap right here. I'll measure it for you guys. We have about $1.20 from the open today down to the 4 exponential moving average. Now, this could retrace back, right? It could get much bigger. It could be the start of a downturn if we start to have massive volume. We did have big volume back up at 294 right here. And when you think about it, you want to be fairly patient on the big move, right? If this is going to turn into a bearish market, then you want to wait to see it break big levels. We've just been churning sideways basically now since the 27th. We haven't really gone, we've had a nice range, yeah, for sure. Actually going back to the 24th. We've had a nice range, but I'd like to see it go either above the 294 area. I want it up here actually. Above 294 for a nice big move up again. Oh, cancel that. Let me put that back. I want this. I'd like to see it move above that 294 area or down below 280.50, right? Because right now, if the big guys are selling, they're not necessarily going to do it all in one day. If they want to take this market down for a bearish market, they're going to try to take it up, sell a little bit more, take it up, sell a little bit more, take it up, sell a little bit more. But once it breaks down, that's really the point at which you could really turn to be bearish, because you know that all of these days of that volume since April 24th to May 8th, for example, if it were to happen to go down today, but I don't believe so, that all of these days right here of volume are potential selling and they're above you, right? So if you're going to be a bear in this market, it's going to pay you to be more patient, because in the meantime, they're likely going to be taking it up to go ahead and sell more and sell more and sell more. Another thing to look at, not necessarily to trade, but to pay attention to, is our fear index, right? We've had our fear index coming down, and it's really still elevated, right? There's still a lot of fear that is happening in the market, but it's starting to slowly come back down. We just broke below the 40 area pretty consistently this week, and we might come back up again and test this trend line right here, the 44.83 area, maybe 44, depending on where we come back up. But for now, it's looking like fear is waxing away, right? It looks like we are in that potential move where fear is disappearing. Doesn't mean that we can't have a drop back down, but for now, it looks like we've got a fairly bearish chart going on, right? If we pull it back to a weekly chart, that's looking pretty bearish, right? We come down, The 4 is about to cross over the 8 on the exponential moving averages. And we've got a lot of ways down. Look at, we were all the way down at 13 at the highs, right? We're not that far off the highs. I mean, we're 30 points, 40 points off the highs for the SPY. And we had a pretty big bounce off of that correction. So if we go back in time and we were to look back, oh, there we go, SPY's crossing up right now. That's one of the things I love. So now you can see why I have all those yellow lines on my chart. When we go back and we look, okay, so what happened back in August or January of 2018, when we came all the way, we came to the 50 simple moving average, just looking back at history, this light blue line. So we came to the 50 simple moving average. Well, this time for our correction, we came all the way down to, or I should say up to, excuse me, to the 200 simple moving average on the weekly chart, which is pretty significant correction. If we go back in time again, you know, it's going to take a little bit of time, but I can't go back to 2008. This instrument was started in 2009. So really the most extreme that we have ever seen on the VXX has been the 200 simple moving average, and we're below that. We might find some resistance right here as far as we might turn back down again. I'm not saying it's not possible. Everything that's happening in the market right now, there is definitely a potential move where we could be curling back down. This might be the top going into that second wave. I said it on Monday, but we're still going up for the moment. It's a matter of being prepared for when it does happen. And until that point in time, be a bull, in my opinion, because you could make some great gains on that up move with things. It could be better to go ahead and paper trade, but it could be better to day trade instead of swing trading because of these erratic movements. Right now, the moves are much stronger than, I'm going to slide it over a little bit because I think my image is hiding the chart for now. So I'll give it just a second to move over. But when it pops up, you're going to see, hey, look, we have come back almost to the highs. We are 16 points away from all-time highs on NASDAQ, right? So when you start to see that, this is a weekly chart too, guys. And you can see, all right, this was a trend line right here. This was holding as the upward trend line, and we're almost hitting that right now. If I turn that into, let's change the color on it really quickly. And let's change the color to a dotted white or white line. And we go and we look at it on a 15-minute chart. Give it a second to load here. You can see that's up at roughly 229. So we do have a bit of a upward movement potential. We could go up another potentially 5 points before we start to see resistance there, and then really sell off from up there. That might be the point at which they're saying, hey, let's go ahead and get in. Let's go ahead and load up to sell up there, and then we're going to go ahead and take our profits and drop it down. You know, I was rereading Reminiscence of a Stock Operator, and it's talking about testing that market, seeing, is there resistance there? You know, don't sell if all those shares are getting eaten up. If those shares are getting eaten up and the price action is going up, you went the wrong way. The riskiest time to get into a trade is in the beginning. So if it goes against you in the beginning, don't let it get worse, right? For now, we've seen some great prints this week. I'm going to give you one tidbit to watch, okay? And you are welcome to come and join us, like I said, in the training pit and learn all about it. So yesterday, we had some pretty big prints on Wells Fargo, right? We had the dividend that came out and some pretty big prints. So you can say, all right, keep it simple, right? If Wells Fargo is going to go above the high of yesterday, right? The high of yesterday was 2610. Go ahead, give me on that. I want to know if it goes above 2610. Crossing up. Or, hey, if it goes down below here. Also looks like a bit of a double bottom, right? We had 25.11 on March 31st. So, hey, if it goes below there, I want to go ahead and know, because that's going to have a potential move that could be very profitable. And we saw some evidence of that in the dark pools. And it might not happen immediately. It might not happen today. It might not happen tomorrow. But when it starts to move, be prepared for it. Okay, that's the best thing I can say. And when you become a believer, that after this big volume right here, you start to see a movement, come on over. Check out the dark side over in the dark pools. All right, guys. Now, I will be doing this again on Monday. If there's any questions, Mike or Zach, do we have any questions that anybody's asked out there? I know for everyone on my streaming end, I'm not my questions right now, but I will get back to you if you guys have any questions. No questions as of yet? Mike's got one, all right. TrendSpider is a useful, yes, TrendSpider is awesome. Here, actually, we'll go on over. Show you this spider here. You guys want to check that out. Log in. You guys can do a free trial as well. The guys are awesome at TrendSpider, Dan and Jake. And it's just going to take a second to load. But it's pretty cool. We'll check out the spy on here. And again, you can change the backgrounds, you can change the colors. We've got FNGU up really quickly. We'll change it to the spy. Here we go. You can create watch lists, you can create scanners, you can create alerts to your phone, to your email, and you have multiple time frame analysis, which is great because you can see, all right, I want to see, I'm on a 45-minute chart, but I want to see the exponential moving averages on a daily chart as well added into this chart. Well, guess what? I'll turn off the dailies right now so you guys can see. Take a second for it to turn. Should hide them. So right here, you've got, this is going to be, the purple is going to be my 8 EMA, and then my 50 and 200. So right now on the daily, it is showing that we just broke above the 8 EMA on the daily. 288.74. Yeah. So we might be going into a trend reversal. I can also look and say, hey, you know what? That's great. I want further confirmation between the daily and the weekly. Let's see. Is it confirming on all different time frames, right? Because you want to have that confirmation. Well, you can go ahead and put it in, and it will auto draw trend lines for you too. So here we have the 50 simple moving average on the weekly is up here at 299.06. And you can see, all right, we broke above the 8, right? This purple line on the daily. And now we're up here on our way up and could potentially hit the 50. And there's not a real trend line that is in the way right now. We'll go and look at the cues. Let's see if it picked up that same one that I drew on my chart. All right. So it doesn't have that trend line that I drew on my chart personally, but that doesn't mean that doesn't exist. And we can also turn off the trend lines if you don't want to have the trend lines. You can put all of the trend lines on. You can do original, you can do enhanced, and you can add extra ones if you want to. So it is a great tool because you can add time frames from daily or weekly onto a 5-minute chart. So you could see, aha, okay, that's really cool. I can overlay them so that I don't have to look at 2 charts side by side and take up double the space, right? Questions from Twitch and YouTube. All right, let me close down Spider because it's going to take up some bandwidth there. Uber. All right, just give it a second to load and then we'll look at it. All right, so we've got the Uber daily up, right? So we had, oh, it's still taking a second on your end. Hold on 2 seconds. We'll get it there. All right, so here we've got this high volume after the earnings, right? We have up here, if you look back to your left, you're gonna see we also hit a resistance area back here from March 5th, okay? And then I would look to say, all right, we've got this area right here. It was resistance, resistance back here on the 10th of March, and then resistance again on the 27th of April. Then it flipped to be support, dropped below, big volume with earnings. So I would say, in my opinion, that we would be bullish above that 3350 area if we could break up from there, but we are far away from the moving averages. So there's a good chance, because there's a good chance that it could go like this, come back down and then up, right? Or if it goes down below, it might come down and then go back like that. So 2 different potential moves that could happen on it. But for the most part, it looks fairly bullish because we're in that upward movement after earnings. But this candlestick, they could do anything with the candlestick that they want to. The middle of the day is not the best time to make an assessment on a candlestick. You want to have all that information at the end of the day. All right. And we also have the 200 simple moving average here, which did act as support. Let me go ahead and zoom in a little bit for you guys on that. So you can see right here, this line right here at 3180 acted as support for today, right? 3164, so it bounced right above it. So we have that wick where we have that buying power that probably bought off of the 200 simple moving average. And then there was some selling power back up here, up at the high of the day above 33. So it would need to really break. We've had 2 days of higher than normal volume right after earnings, completely normal. Many times that 3rd day will determine. If you think about a cash account as well, a cash account, you're going to have the trade date plus 2 days for it to settle and be in that account. So if you were to buy it, you know, many times you'll see that 3rd day, maybe even that 4th day, the trend is really going to be clear after earnings. So if tomorrow we come back and we gap back down, tomorrow's trading day, meaning Monday in this case, and we come back down and we gap down here, yet we bounce off of the $30 mark and we continue to the upside, it's a fairly good chance that that could be bullish. And look, that candlestick just changed from red to green today for the volume down below. I try not to have the red and green on my candlesticks to get psyched out. Just look to see where the price action is in relation to the averages and where are we going and what's the volume doing, because the volume is really going to drive the price action with supply and demand. Any other questions out there? I know, let's check out Amazon really quickly. I already gave you guys an Amazon assessment. Disney. I had some friends asking me about Disney. Let's check Disney out. So Disney's pretty wild and erratic as well. Once we put on the moving averages, you can see we came back and we tested the high back here of 108. We're hovering around there. It looks like it was not able to hold above. All right, let's wait for that chart. It was not able to go ahead and hold above that green line, right? So you can see that it really acted as resistance all the way back in March. It did have a nice run up after earnings. We are in that third day. We could pull back again and then move to the upside. So it might pull back and then go to the upside. Or if it pulls back and breaks back down, I'd look for a big break below 100. So an 8-point area to watch, right? Because when you look at that chart, it does not want to move for me. When you look at the chart for the past couple of weeks, yes, we just had earnings, right? But overall, it was really just going sideways, right? It's pretty much been in this range for the past 2 weeks, almost whole month, actually, sorry, the past month. So April 8th, May 8th, it popped up one day. That was it. But other than that, it's just in a distribution or consolidation area where it's going to have a move. And even right after earnings, it didn't break out of that box really. It did today, and now it's come right back inside. It retraced back into it right away. So looking for a break of 108.50, really 109. I'd like to see that 109 break. We are above the 50 simple moving average right now. We did have earnings this week. However, all of their parks are closed, and that's really hurting their business, as well as all their cruises are also done. So throwing a little bit of that valuation into it, but really looking the chart, you know, hey, yes, it could be great, but wait for that move, right? Wait for that possibility to happen and then capitalize on it. Another great one from this week, yesterday. You guys, if you guys don't know already, I do my list live every morning on Ticker Tocker, and you guys can come on over and check that out. I also provide that same list to my subscribers for my newsletter, and you guys get it every single morning, the list that I'm also watching. So you can see right here, hey, Fiverr, this one was on the list. This is a lower float stock. This could have a really big move if it does squeeze those shorts. So right now we came and we tested the open of yesterday, and it pulled back a little bit. You can see it opened here, spiked up because those shorts were not expecting that big move. But you think about it, maybe there's a lot of gig workers that are out there. They're working online. They're trying to make an extra buck. And so Fiverr is working on that. This could be a coronavirus COVID-19 trade because it is an online workspace where people can go ahead and work and make money. Especially if somebody's been unemployed, they might try to pick up little gig work off of this. They don't have to go out into the public. So this was a newer IPO way back in, when did it open? Back in July of last year. So we did break out and hit all-time highs on on Wednesday. And then we had earnings, highs, squeezed those shorts. And then today we're on that upward trend up. Not as high volume as on Thursday, yesterday, but it's still in that upward trend. You know, when we go ahead and we break out up here, if there were any shorts that thought, hey, this is just going to drop like a rock. Let's look at the earnings even. Did they have lower? They had surprise extra 8 cents per share earnings. But the fact that it's lower float could really get it to have that momentum. Another one that is lower float with, I think, 56 million, I think it is Space, Virgin Galactic, right? So this one moves, and when it moves, you can see, all right, right now we might be a bit of, this is what my eye is seeing right off the bat. Got this trend line right here, right? So we're butting up against that. So if we were to break that with some higher than normal volume, we could really have a nice move to the upside, right? We found support here, had a bit more volume, and it took off. We're testing this other trend line. Are we going to break above, or are we going to break down further? It's a matter of reading the charts, really, you know, watch and see what's going on with the volume, what's going on with that price action. Mike, do we have any other questions? If there's no other questions out there, then I will go ahead and wrap it up for today. Again, you guys can check me out. You saw at the beginning, I am pretty much all over there. Thanks to Mike, I'm on Twitch now too. So shoot me a message if you guys have questions. Check out my profile on Ticker Tocker. Come and join me in the mornings when I walk through my watch list, or even subscribe to the newsletter. And I hope you have a great, amazing weekend. Be safe. Do not forget that it's Mother's Day this weekend on Sunday. All right. Have a great weekend. We'll see you guys on Monday.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the power